Dividend stocks for 2024. Strategies based on potential presidential outcomes. Today we're going to be exploring potential outcomes of 2024 election and how it could impact dividend stocks. We'll examine investment strategies for two possible administrations, Trump and Harris, which, the Republican and Democratic Party are going to win this year. One of them's going to win. No third party. RFK was like the only third party, and he was not going to be getting anywhere close. Maybe, the 5% needed for government protection and being on all ballots as a third party. But looking at Trump's more favorable to is traditional energy, oil, gas, defense. If you think about Lockheed and Boeing and the financials, deregulation, tax cuts. Harris focused on renewable energy, solar panels, wind energy, healthcare, infrastructure, and now let's explore the benefits of each sector and some stocks that might benefit under each. So, what is a dividend stock? Before we get started, I want to, give a simple explanation. A dividend stock pays regular cash payments called dividends to its shareholders. It's investing as a reward for holding the stock. The idea of it is centering around rewarding shareholders, and so it attracts more investors by rewarding those shareholders and reflecting the company's financial health by being able to provide such dividend, especially at a high dividend yield. Like, dividend kings and aristocrats have the ability to keep raising and raising because of good financials. Introduction to dividend investing amid political change. Dividend stocks can provide stability, especially during volatile times, but political shift can alter sector performance, impacting stock dividends like oil. Obviously, it's going to go down if KAMALA wins because they don't support oil, they support renewable. Why focus on Trump versus Harris incomes? Policies vary drastically in regulation, environmental policy, healthcare, and more. Aligning investments with these shifts can maximize dividend returns and growth, like of the stock itself. The actual share appreciation will go up, and let's say you just switch sectors when your investment focus next election, when you think, let's say, let's just say Trump and Harris win again, which it can't, but if they win again and the other person loses, if you focus the other half, those stocks are going to go up while the other ones go down, rebalancing. And our goal today is outline stocks that align with each administration's likely policies. How politics influence markets. Presidential policies can influence markets through regulation changes, tax adjustments, shifts in government spending, and key sectors affected include energy, obviously. I've mentioned that already multiple times. Healthcare, defense, increase in defense budget. Republicans normally, agreeing they want more money in the defense budget as the strongest country in the world. And financials, tax cuts, I already mentioned before, no overtime tax, which more money to person, more people investing, and a targeted dividend strategy can leverage these shifts to maximize profit. That's what you want. Dividend investing is about the long term, but to help your short term. And so let's get started on Trump wins. Energy sector focus. With a focus on deregulation, Trump's policies could benefit oil and gas companies. Dividend stocks to consider: ExxonMobil, XOM, high dividend yield, extensive global reach in oil and gas, and another one like Exxon, Shell. Actually, about a month ago, it had a big company sell, I think it was a few 100,000 shares or dollars of the stock, and it's down right now. So Shell could be a potential investment for me. Chevron, CVX, Diversified energy portfolio with steady dividends. Why? Deregulation could drive earnings for oil majors, obviously. Potential increasing dividends. So the potential for an increasing dividend is there during Trump's presidency, which I think is great. Defense sector, Trump win. Under a pro defense administration, government contracts and spending on defense can increase. Lockheed Martin got a big contract, I think also about a month ago. High dividend yield, stable contracts, strong growth. Raytheon Technologies, another one I invested in, leading in aerospace and defense technology. Why? Increased defense budgets may result in stable, high dividends and contract security. Boeing also had another contract. I think it was short of a few million, and it was to develop aircraft for fueling. So these contracts do benefit the defense sector. And now let's get started on the financial sector. Another Trump win. Financials may benefit from eased regulations and tax policies, which can reduce costs and boost profitability. Dividend stocks to consider: JP Morgan Chase, JPM, steady dividends with broad revenue streams, Bank of America, BAC, consistent dividend growth, large customer base. Another one to throw out is Visa, MasterCard. They aren't going anywhere, at least for a long time. I just don't see them leaving. Everybody uses MasterCard. My credit card, MasterCard. It's like, well, you gotta use it. So why? Reduced regulations may promote greater lending, benefiting dividend stability. Industrial sectors. Potential focus on infrastructure projects and manufacturing could support the industrial sector. Triple M, manufacturing leader, steady dividend history, Caterpillar, major supplier in construction and infrastructure projects. Everybody wants cat. Why? Industrial stocks could benefit from potential growth in public infrastructure projects. Now let's get to the Harris wins. Harris administration may focus on renewable energy, creating growth for green energy companies. Dividend stocks to consider. Next era energy, leading renewable utility with growth focus. Brookfield Renewable Partners, BEP, global renewable projects, high dividend. Why? Policies supporting renewable energies could accelerate expansion, increasing dividends, and at the end of the day, if these stocks are growing their dividends, more investors, the stock price is going to go up. That's just how it works. Healthcare sector, healthcare expansion policies could drive demand for health services benefiting healthcare companies. Dividend stocks to consider: United Health Group, UNH, leading healthcare services provider with growing dividends. ABV, ABBV, high yield dividends, growth in biopharma sector. Why? Expanded healthcare access could support stability and growth in health dividends. Utility sector. Utilities could see growth under renewable mandates, and they offer stable, reliable dividends. Dividend stocks to consider: Duke Energy, steady income, green energy expansion. Southern Company, high yield with renewable commitments. So to get on the renewable energy and utility sector, renewable energy, it is most definitely going to be the future. Right now, all it needs to do is just keep hitting trends where, it's where it breeds innovation. For example, if you take the TV, if everyone continued to go outside and no one watched the TV, you would never have a colored TV. And that colored TV just expanded, and more people want colored TVs. So you have to make the colored TV better. And so it got thinner and bigger, or thinner, smaller, longer. So now you have your 70-inch flat screen TV. Nobody owns a color or non-color TV unless it's a collectible old. And it may not be within our lifetimes where it is all this renewable type energy, but it's gonna keep growing. There will never be a point where it is not going to be useful in the future, because the more we hurt our planet by sucking it up free oil, there's only so much before we need to start finding a way to get more of it after we've sucked it all. So I think it's a great investment. But let's get to real estate. REITs focused on infrastructure in urban centers may benefit from infrastructure and green tech expansion. Dividend stocks to consider. Prologis, PLD, focus on logistics / warehouses, high growth potential. American Tower, AMT, key player in telecom infrastructure. Why? Increased infrastructure investment could support long term dividends and growth. Now, let's say either or, some mixed portfolio suggestions. Considering balancing stocks to mitigate risks across administrations is obviously something you're going to need to do. And on the next slide, we're going to be talking about risk. Microsoft, reliable dividends tech stock with growth potential. Johnson & Johnson, healthcare leader, steady dividends under various policies. So, and they have a history, and I'm pretty sure Johnson & Johnson is an aristocrat king. Why? Some sectors and companies perform well across political climates. And balancing risk to reward, like I mentioned, with political shifts, weigh potential risk each presidency may pose. Trump, potential for higher returns in oil and defense, but risk in tech / renewables. Harris, stability in healthcare and utilities, but risks for oil and defense companies. Less budget equals less money. Diversified dividend portfolio could offset sector specific risks and benefit you in the long run. High yield versus growth in dividends. High yield provides steady income but may have slower growth, like realty income. Growth increases payout over time, potential for compounding returns. There's a few that you could mention. For growth dividends, consider blending both types for a balanced income and growth strategy. My final thoughts. I'm going to have more focus on industrial defense and energy, well, not renewable energy, oil, gas, if Trump wins, and Harris, more renewable and healthcare and utilities. But in the end of the day, a balanced approach allows for dividend growth regardless of political climate, considering monitoring policy trends and adapting your portfolio accordingly for maximum gain. I just wanted to end this video with thank you for watching. It's very much appreciated. Please subscribe, leave a comment, and of course, click the like button. Thank you.